Assalamualaikum Doctor. So today we are from Group 7. We are going to presenting our final case study, our project, which is about Muhammad family. Next. For introduction, in financial planning, we are going to assessing current financial condition, setting clear monetary goals, and devising strategy to enhance cash flow, manage asset and liabilities, and track progress in this family. Next. This object in our case study, there are four objectives that we are going to accomplish, which is determine and evaluate Muhammad family net worth, determine and evaluate Muhammad family financial objective. The third one is determine the Islamic financial principle that need to be adhered to, and lastly, suggest an improvement or future plan to achieve the family financial objective based on their current financial condition.
Next, I will present the family background. The Muhammad family got 4 members and they are living in Kuala Selangor. First, Mr. Muhammad, 40 years old, is an engineer, and his wife, Mr. Hani, 39 years old, as a teacher. They have 2 children, which is Hadi and Alia. The Muhammad family adheres to Islamic teaching, emphasizing financial responsibility, especially saving, zakat, and future planning. The both parents got their stable full-time jobs and also an additional income from agricultural land. Their controlled spending allows them to save a significant amount monthly. The Muhammad family also has successfully accumulated growing assets while maintaining manageable debt level. Their careful money management and forward planning contribute to their overall financial security for their family. Thus, the financial goals. There are 4 goals in the Muhammad family. First, the Muhammad family wants to perform Hajj in next 10 years. For example, the future cost for husband and wife is 94,074 ringgit. Mr. Muhammad and Mrs. Hani should save a total of 8,206 ringgit in their tabung haji account annually so that they could perform Hajj in the next 10 years. Second, the Muhammad family, especially for the parents, they want to build an education funds for their children. First, for Hadi future study costs for the next 4 years is 73,158. They might need to save 17,487 annually. For Alia is 82,340. So total save for their both children is 26,747 annually. Third, the Muhammad family need to save for emergency fund by building in 7 years. Mr. Muhammad must save 13,051 ringgit annually, which is cost them 1,088 monthly. The fourth financial goals is they want to buy a second car in the next 4 years. Just estimate the car in the future cost is 56,253. So approximately the both parents might need to save 1,172 monthly, and for the annually part, which around 14,064 ringgit.
For the asset liability, revenue and expenses part, the Muhammad family owns several variable assets: a car worth 52,000 ringgit, a house valued at 450,000 ringgit, agricultural land worth 590,000 ringgit, as well as saving of 5,000 in tabung haji and 30,000 ringgit in their bank raya account. All of this bring their total asset value to 1,127,000 ringgit. On the liability side, they still own 55,000 on a car loan and 240,000 on their house loan. Totaling is 295,000 ringgit in liability. Mr. Muhammad earned 10,500 ringgit per month, while Mrs. Hani earned 5,000 per month. Together, their total monthly household salary is 15,500 ringgit, which add up to 186,000 ringgit annually. In addition, they also receive income from agricultural activity amounting to 15,000 per year. So, their total annual income is 201,000 ringgit, which show they have multiple sources of income contributing to financial stability. On the other hand, the family spend 10,250 ringgit monthly for living expenses, totaling to 123,000 ringgit annually. They also spend 6,000 per year for maintaining their agricultural land. So their total annual expenses come to 129,000 ringgit. This means they are living below their mean, which is a good sign of financial discipline. Lastly, to calculate net worth, we subtract total liability from total asset. The net worth for the Muhammad family is 832,000 ringgit. This positive net worth of 832,000 show that the family is in a strong financial position, or only much more than they all.
Now I'm going to talk about adherence to Sharia principle in financial management. The Muhammad family exemplifies a strong commitment to Sharia principle in their financial practices. They fulfill their religious obligation by regularly paying zakat, which includes zakat fitrah and zakat on wealth. This is the calculation of zakat on income payable computation for the Muhammad family. It can found that the answer of the zakat is 4,020 ringgit and 10 cents. Based on the above calculation, income in Malaysia includes wages and salaries, bonuses and allowances, income from freelancing, and revenue from agriculture. The calculation of zakat on income is predicated on important Islamic financial concepts such as al-ma al-mustafa, which is newly earned wealth. According to Sharia, it is obligatory to pay zakat if certain conditions are fulfilled. Next is nisbah, which is minimum threshold. Before zakat becomes required, a person must be wealthy enough to purchase 85 grams of gold. This guarantees that only people with asset incomes pay zakat. Next is deduction basic needs. Islam acknowledges the right to meet fundamental needs. Thus, only excess wealth is zakatable through permissible deduction such as bonds, children's, travel savings, and retirement contribution. Last but not least is rate, which is nisbah and percentage. 2.5% of net zakatable wealth is the typical rate. This is consistent with classic zakat on financial asset and business earning.
Next, suggestion for improvement. First, Mr. Muhammad should consider a Sharia compliant insurance. There's a 3 Sharia compliant insurance, which is Sun Life Takaful Insurance, Etika Car Insurance, and then AIA Life Insurance. These 3 of insurance can provide security without compromising their religious belief. The second one is invest in Sharia compliant unit trust. There's a 3 unit trust, which is Maybank Sharia Balance Fund, CIMB Islamic Equity Fund, and Principal Islamic Equity Fund. Mr. Muhammad family should allocate 40% of asset in Maybank Sharia Balance Fund, 30% in CIMB Islamic Equity Fund, and 30% in Principal Islamic Equity Fund. This could generate average annual return of 4% to 10%. And the last one is establish a comprehensive wasiat. Mr. Muhammad can appoint a wasi, executor, and also design a guardian for their child, which is Alia. After that, clearly stating all the debts and obligation for prompt settlement. And lastly, outlining the asset distribution according to Faraid. In conclusion, Mr. Muhammad family journey serves as a practical model for other Muslim households, which is aiming to achieve prosperity while remaining aligned with their faith. Thank you, Doctor.